Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh, Bahashem, Yahweh Shai, Bahashem, Wakar. Double honors to the elders for preaching his word truthfully and sincerely. And shalom to the Akim scattered through the four corners of the globe, preaching the word truthfully and sincerely. And I say shalom to you Akim out there. And this is a sit-down lesson that I want to bring out from CNBC.com, published by Samantha Subin and Hawk Young Kim from CNBC.com, last updated Thursday, March 9, 2023 at 6:37 p.m. Eastern Standard Time. And it reads, the S&P 500 closes 1.8% lower as bank stocks scrambled to pressure the Dow Jones shed more than 500 points. Live updates. It says the stocks tumbled Thursday as banks and other finance stocks sold off, and investors braced for a key payroll report Friday that could shape the direction of interest rates. The S&P 500 slid 1.85% to end at 3,918.32, while the Dow Jones Industrial Average dove 543 points, 0.54%, or 1.66% to settle a 32,254.86. The Nasdaq Composite shed 2.05% to finish 11,338.35. Thursday's loss brought the Dow Jones to close below its 200-day moving average for the first time since November 9th. For the week and the year, the 30 stock index down 3.4% and the 2.7% respectively. Both the S&P 500 and the Nasdaq are up 2.5% and 8.33% in 2023 respectively, but on track for weekly losses of 3% or more. The SVB Finance cratered 60% after announcing a $1.75 billion stock sale, pushing its market capitalization to over $6 billion and dragging down other regional bank names. Silvergate shares plummet more than 42% on news that it is shutting down operations. The losses push the S&P financial sector down to 4.1% for its worst day since 2020. Finance bellwethers Bank of America and Wells Fargo also took a hit, tumbling more than 6% each. The Fed has changed the narrative that drove stocks higher for the most part of January and last December, said Adam Sherman, CEO of 50 Park Investment. The market rallied on the assumption that the Fed would stop raising interest rate, would push the summer or sometime in the near future. Powell made it very clear that it's just not the case. No data seems to suggest that the Fed should stop hiking rates. And it says, Sherman said, adding, many investors are selling into the job report, reduce their risk, and are finding values in less risky assets like bonds offering a attractive yield. The market is looking for a bullish catalyst, and it cannot find one, he said. Investors received more news on Friday on the state of the labor market ahead of Friday's closing watch non-farm payrolls report. Jobless claims for the week ending March 4th rose more than expected, signaling that the labor market may be starting to slow. In retrospect, ADP payrolls reported job data on Wednesday suggesting a resilient economy, heightened fears that the feds need more height to slow it. Some economics of those city expect positive surprise to the upside coming Friday's payroll data following January's blowout number. Strong job growth could mean bad news for the market, wrote City Research strategist Alex Saunders in a Wednesday note. Giving the good news is bad news for markets. We think this would likely cause equities to sell off further. The support case for the outsized federal hike, Saunders said. Thursday's move comes a day after reiterating his warning message to lawmakers, and his central bank may rise interest rates higher than previous expected. While the federal chair emphasized that no decision has been made regarding the March meeting, traders are bracing for a larger than expected hike following a batch of strong economic data in recent weeks. As for Thursday afternoon, traders were pricing in a rough 61% chance of a 50 base point increase according to the CMC Group Fed Watch 2. But as of right now, the Dow Jones, S&P 500, and the Nasdaq Composite, they all fell today. Especially with the Dow Jones fell, I believe 520 something points due to the fact of the continuing worries of a slowdown economy and the rise and increase of more rate hikes from the Federal Reserve as they wait on the jobs reports of the labor market data statistics as of tomorrow. So they will see how the markets react then. But as of today, the markets definitely crashed, and the banks took a crash as well too in the markets. So once again, it shows you a sign of modern day from Babylon on the economic scale is definitely downward, and our economy is still at a standstill. Somewhat growth, but not so much though. Even though the labor market is steady, solid job gain within the last few weeks, according to the reports. But the main concern is the Federal Reserve is gonna continue to rate uh, interest hike. Interest rate hike is gonna continue to increase. Then, as they continue to tackle the inflation, because the inflation increasing a little bit, so we'll see. Because, like I've been mentioned again previously, I've been covering the stories in regards to the markets and stuff like that. So the stocks and market reacts of what's going on of the Federal Reserve, what type of announcement that they're gonna make, and what's going on globally financially. So it all depends on in those categories that I just mentioned. It depends on how the stocks and markets react to a positive gain or a negative gain. But as of today, the stocks and markets definitely affected the banks, stocks, and the Dow Jones and the S&P 500 and the Nasdaq Composite as well too. They all crashed today. So with that, hopefully this sit-down lesson was edifying of this reading of this news article from ncnbc.com, last updated Thursday, March 9th, 2023 at 6:37 p.m. Eastern Standard Time, and published by Samantha Sumbum and Hai Young Kim. And so with that, hopefully this was edifying. I would like to give all praises and glory and honor to Yahweh, Hashem, Yahweh Shai, Bahashem, Wakar Kadash. Double honors to the elders for preaching this word truthfully and sincerely. And shalom to the Akim, scattered in the four corners of the globe, preaching the word truthfully and sincerely as well too. And until next time, I will say shalom.